All right, good morning, everyone. Monday, 7:30 a.m., March 9th, and price of Bitcoin 78.25. What an epic slide over the weekend, folks. And I mean, just truly epic because prices have literally dropped from the $9,200 high just about 3 days ago, right? And so now they're down to $7,800. So that's a drop off of now, let me see, a total drop off of 16% and $1,500 to the low, from the high to the low. I mean, obviously we're a little bit higher than that. We're about 15% down, $1,380, right? So everyone is obviously, freaking out, and rightfully so, right? So what do we kind of do in this environment, right? How are we supposed to look at this and say, all right, well, what's going to happen to Bitcoin, and you know, where can we get in, where can we get out, that kind of stuff, right? So here's the thing, okay? I was just talking to the Advantage community earlier, and I stated that at the middle of February, I told everyone in the Advantage side that I was getting out of all my crypto holdings right there, okay? One reason being was because when I started to hear the same sort of echo chamber, echo bubble talks about when Bitcoin was, I'm sorry, when Ethereum was up here about 285, $300, people kept saying that, well, now it's at 300, it's got to go to 500, it's got to go to 800 or all-time highs, right? But what they don't realize is, we've consistently done this over and over again, right? From the $1,400 high, we put in that first low around $400 or so, then went back up to about 825, and went all the way down to $80, and then we went to about 355, and then we went down to 120, and then we went up to 285. Right? So the point is that this whole thing is really telling you that, especially crypto as an asset class is really in a lot of trouble. And I would probably say Bitcoin might be the only exemption from that. But here's the thing, right? Bitcoin and crypto have also never faced the current landscape where prices across the equity markets, whether it's the US or globally, they're just sliding. I mean, they're getting wrecked. Look, Marathon, oil company, right? Down 34%. Oil is down, 25%. It started trading down $10 from the previous Friday close, around 42 or 43, and it's opened at around 31 and a half. Okay, you could see Tokyo Stock Exchange down 5, Hong Kong down 4.5, FTSE down -6.7, DAX Germany -7. There is some crazy stuff happening in the markets, and I don't think Bitcoin or crypto is going to be immune to it. Okay, we talked about this in our video yesterday, that because Bitcoin has never really faced any harsh environments, it's been really fortunate to have been living essentially on the back of a 10-year bull run, as you can see right there, right? So you can see, let me zoom out of this actually. Okay, so this is the last 10 years, right, folks? We've gone from the 2009 low, which is essentially right around the time Bitcoin was created, to where we just put in a high around middle of February, so around 406%. Okay, so while the S&P 500 gained 406%, Bitcoin has obviously gained a few million percent, right? But has it ever faced tough recessive environments like this right here, where it was a downturn from September 2007 all the way about March 2009, a good almost a year and a half? Not really. We have no idea how it's going to perform in those kinds of environments. And so this is really the true test of Bitcoin, right? If it's supposed to survive as anything other than a speculative asset, it's got to do it soon. And I mean like really, really soon, because it's already proven that it has not done anything really. From the top down, we're down about 25, 26%, okay? And that's about less than, or actually, I think that's greater than the S&P 500, because I think the S&P 500 is down about 19% total from the middle of February, okay? Even considering this pre-market slide, right? So the point is, I mean, Bitcoin is actually sold off even more. Okay. And not only has it sold off even more, what's dangerous about this environment is that in these kinds of sell-offs, the liquidity is even thinner, right? So if someone wanted to say liquidate $50 million or 100 million, it's way tougher in an environment like Bitcoin versus say in the stock market. Okay. So when you have liquidity issues in this kind of asset class, what you'll get is basically even sharper price traps. Okay. So don't even think that, this is the end, because it may not be. We may actually just be getting started, or we might be in the middle of something really scary, especially, like I said, given the fact that, pre-market trading is already showing you some really aggressive, fear and sell-offs. Okay. Yesterday, for the Advantage community members, I wrote up this post, right? And this wasn't a doom and gloom kind of post. It was just to keep you guys aware of where the environment is, what you may need to do for precautionary measures for your own capital, for your own investments and holdings, right? So yesterday, like I said, oil opened at $31, almost a $12 drop from the Friday closing around 43. Okay. And, typically oil slides so deep, they've actually forecasted recessions to come. Okay. S&P 500 and Dow Jones Industrial, basically American equity indexes and global indexes have all seen, like I showed you earlier, -3 to -4.5% decline. Actually, it's even greater now, because you could see 5%, 4, 6.5, or 6.7, 7, right? So things are just getting hammered across the board, and there's really no exemption. Even gold, right? And I wanted to show you guys this. Okay, even gold is having some issues, because what's happening in these kinds of environments, folks, is that when institutions essentially have to hedge their positions because the market is sliding, and I mean the market as in the equity markets are sliding, they basically have to free up some cash, right, for their positions so they don't get margin called, meaning they don't have to pay absurd fees or have their position closed down from bigger, firms that are lending money to these institutions, like on margin, just like how you and I, quote unquote, borrow money from Bybit or BitMEX, right? The same way institutions actually, buy stocks or sell short through borrowing money or borrowing stock on other firms. Okay, so when they get margin called, okay, essentially what happens is they have to be able to free up cash to be able to save their other positions in other markets, such as gold. Okay, so this is where you see even gold is dropping. So what this tells you is overall, in any market, there are some severe liquidity issues that are happening, because markets as a whole anywhere are dropping. So there's no saving yourself, right? Like, I mean, how are institutions and investors supposed to get yield when no market is really safe, right? Whether you look at the S&P 500, whether you look at gold, pretty much anything. I mean, even oil as a commodity is down, -20% over the weekend, right? So if institutions are getting hit so hard, they're going to have to start protecting their positions. That means they might have to sell gold. They might even have to sell more equities. And this is where it becomes a big domino effect, folks. Okay. It's very easy to topple one domino, and that just kind of crashes and smashes into others, especially when you've already had, a big heightened movement to the upside like this, right? And then you have a very quick and fast correction like that, where no one is really prepared. And then overall, you could see, Chinese and American companies are already starting to cut their forecasting for supply chains across the board. And on top of that, to make it worse, this whole coronavirus scare is getting worse. There's no cure for it. There's more people getting infected. I think I just read globally this morning, there's 110,000 people infected and close to 37 or 3,900 people that died. Okay, especially the US. Now we actually have a high profile senator, Ted Cruz, who is self-quarantining himself. I think Mike Pence, the vice president, is self-quarantining himself. So you can now see the reach of this virus is really starting to panic and set fear into people, right? Italy is doing mass, self-isolations and quarantines, and they're not allowing people to go out and congregate in big public places. Um, Schools in America are starting to close down. People on Wall Street, some of my friends actually told me that they're not even going to work this week because they're just scared of this whole, getting coronavirus, right? And also on top of that, I mean, I think they get to work from home, right? But a majority of even U.S. companies are telling their coworkers and employees that it's best that you stay home. So productivity might decrease. You might see, less people in the food industry, maybe going out for food, less travel, meaning less consumption on oil. There's all kinds of, external domino effects that are essentially, going and hitting these places. And I don't think the world has sort of faced this kind of black swan event. And, even though you may think that the reaction is a bit too, I don't know, I guess, I don't know. I don't know what the word is. I can't find the words properly. If you think there's an overreaction, that's what I'm trying to say. Sorry about that. If you think this is an overreaction, well, the thing is, when you're unprepared for something in life, right, especially on a global scale, yeah, I mean, of course, there's going to be overreactions, right? Because you don't know how to deal with this particular thing. All you can really do is do your best to protect yourself, your fellow citizens, maybe even the stock markets, right? But panic and fear really sets into people, right? Really fast. Okay, so and you can see it's already happening in the markets. Okay, and the thing is, if it was only an overreaction from the public, and say the government was calm and the equity markets were calm, I would say, okay, you know what, maybe this whole scare about coronavirus is not that big. But you could see it's setting in everywhere. I mean, there's no exemption here, folks. There's not a single market that you see that's doing well. All the indices are down. Global indices are down. Gold is the only thing that is slightly up. And in this kind of environment, you would figure that gold will be up a lot more, but it's not, right? Even gold is struggling, So it's just time to be careful. And this is the post that I kind of wrote for my Advantage members. Again, my job is not to give you financial advice or anything, but I'm at least going to tell you how I am positioning myself, not for the doom and gloom scenarios, but rather let's take a step back. Maybe let's, think about how much money we have allocated to crypto or any other market. And by the way, even equity markets, I actually sold last week, beginning of last week, and I think that was, or was it? This was Friday. No, actually, this was Friday, Thursday, Tuesday, Wednesday, Tuesday, Monday. So this is where I sold right here on this second pop-up. I think this was maybe Tuesday, I think, or maybe it was Monday. Anyway, I sold on this spike up, and I let my Advantage members know, hey, I'm getting out of the market. I don't know what's happening. I think this whole coronavirus thing is going to get worse, and the markets are already starting to break critical structures. So I got out, right? Hey, I could be wrong, and for all I know, we could be doing double bottoms like this, and we could be heading back up. It's very possible, right? But do I want to take that risk right now, especially with the way pre-markets are looking? Definitely not, definitely not. I'd rather let this whole thing sort of subside, wait to see where the markets maybe close later this week, and then think about getting back in, okay? All right, so sorry for that long spiel. And yeah, by the way, Harry says, in 1 week here in Germany, cases jumped from 60 to 1,150. That's what I'm saying. This is the kind of thing that people are really not prepared for, right? Some of my family and friends, in Europe are also telling me that things are getting a little crazy over there, right? And even in India, people are starting to become more careful. They're not going out as much. So you could see the impact is seen essentially on every little ecosystem of commercial markets, right? So more than likely, it's going to impact every single market. And the thing is, crypto is not going to be an exemption because it's a speculative asset. Speculative assets get sold a lot faster and a lot harder than traditional assets, okay? So don't think by the time this week is done with, if the equity markets keep going down, I would not be surprised if Bitcoin goes down to 6,000, maybe 800, 900, or 7,000 flat. Or I think it's like 7,150 where the yearly opened. So that's actually a good area, you know, like 7,150 or so. Yearly opens are typically my go-to in traditional markets and even in crypto. So if we get to 7,150, I'd really like to see the reaction there. Okay, let me see where the yearly open was. All right, let's check it over here. So this is, let me see here. Let's actually open up the monthly. Okay, so the yearly open, this is the yearly open candle, right? So that's around 71.63, as you can see. Okay, so if we just put down a line right there, so let's do that real quick. Yeah, so that's where we are, you know, in terms of the yearly open. So yeah, I mean, we still got a good $600, $700 to slide down. Very possible, you know, it might even be possible in this particular month, you know. You know, the scariest thing that I personally think about crypto is I think the delusion of market cannot go down or should not go down because the halving is coming up. I think that in any market, when you have a single event like that, that really gets people bullish or even bearish, right? I think it's very scary. I think it's very scary because what you've basically done is you've tricked an entire group and a generation of people to believe in a market so much so that they're willing to stake their entire, you know, money, leverage, you know, pretty much their entire careers on like a bet like that, even taking out loans, all kinds of crazy stuff. And could you just imagine what would happen to an industry that depends on a single event like that to catapult it to higher prices? Just imagine, say 1 year like this, it doesn't happen. And prices actually go lower, right? Say prices go down to like 6,000, maybe, you know, 5,000, maybe 4,000. You know, that would be a devastating effect on the industry as a whole. And just remember, folks, just remember that it does not matter what you think will happen to Bitcoin just because of the halving, you know, just because it's held true the previous two times. The previous two times, we never had an event like this, a black swan event like this. We also never had markets, traditional markets sliding like this. So the environment is completely different for you to say that Bitcoin, you know, has to survive in these kinds of recessive environments, right? Anything could really happen, you know? So the point is that, you know, if you were really to make an industry capitulate, this is the perfect time to do it. And again, I'm not trying to get into doom and gloom scenarios. I'm just trying to tell you how to be smart about this stuff, okay? These markets are very fickle, all right? Just like the internet bubble was. And I know everyone likes to criticize me when I start, you know, talking about Bitcoin could go lower, and, you know, it's really not that special of a technology. It's a very unique technology. It's very innovative, okay? But, you know, here's the thing, right? It doesn't mean that it's immune to external factors like we just saw about the coronavirus scare, right? Obviously, if traditional markets are not immune, what the hell makes you think Bitcoin is? And like I said, the perfect setup, the perfect stage to destroy, you know, a whole industry like crypto would be what it is right now, which is maybe a recessive environment coming up, maybe this coronavirus scare, and the whole halving event, hoping, you know, for most people that prices should go up. And imagine what happens to people if prices keep sliding down. Miners will start capitulating, right? I mean, miners have to, those are sort of the bread and butter of the crypto industry. If they start capitulating and we see miners start posting losses and they have to sell crypto to keep their mining operations in order, man, that is very scary, right? So you could see that it's almost really, an environment that's set up to basically crash this whole industry if it's really coming to that point. And this is why I want you guys to be careful, because like I said, don't fall into the trap of thinking that the halving is coming up and I'm going to go all in, and wherever Bitcoin bottoms, let it bottom. Let it show you that it's bottoming. Let it get into a reaccumulation like this for 4 months or 6 weeks or whatever, however long this was. Like over here, down here in 2018, this was from November 2018 all the way to April 2019, right? So a good 4 or 5 months of just reaccumulation. Let it bottom. Stop trying to catch knives, okay? Here are some trend lines that are at work, okay? First one right here, broken, all right? Second one, this is again log, right? So second one right here, coming from this bottom around 3,300, second touch around 6,410, and third touch is coming up right around 76.55, okay? Have yet to touch it, okay? We don't really know if it's going to hold, but like I said, anything could happen, right? We could bounce off here. Who knows? Next week we might come up with a cure and markets, really start to rally or whatever, right? But for the most part, the markets are not showing any signs of a bottoming or strength or really, any turn in sentiment. In fact, it's actually getting worse. So it might be wise for you to consider all these factors that are at play and think about how you can protect yourself. Okay. All right. But anyway, going back to technicals. Okay. So I had laid down this blue marker around 76, 78. It looks like we hit it overnight. And I'll show you exactly where that comes from, okay, the blue marker. It basically comes from this key SR level right here that was previous resistance turned into support right there. Okay, so we pretty much hit that like spot on. And now we're trying to figure out, hey, are we going to bottom here? Is this it? Or are we going to sell off some more? Well, so far, I mean, any green consolidation candle like this that you see has pretty much sold off, right? Even the two little dojis right here sold off, okay? So any pauses that you see are likely what's really happening is, the grinding of supply selling into demand, okay? So it doesn't seem like supply is really slowing down, right? Meaning that it doesn't seem like the sellers are giving any bit of breathing room for the buyers to push prices up. Because here's the thing, right? The market as a whole, the way it's structured right now, it would be very ripe for a short squeeze if prices kind of popped up a little bit. And you don't really want to allow that kind of momentum to happen as a bear, right? Because imagine if you saw, bottoming like this, and then you start seeing like this, and it started going higher towards like $82, $8,300, and this might actually cause a short squeeze because there's not a whole lot of consolidation periods in this whole drop, right? So a little pop even could push prices much, much higher and much faster. So to be careful, I bet you the bears are just defending their positions with all their might. And every time price pops up, say $20, $40, they just slam it down again, okay? So I don't see a momentum shifting in this anytime soon. And I've drawn these channels right here, okay? And you can see, this large descending channel, we're basically right at the bottom of it. So if you're kind of, wanting to counter trade, maybe take a bet for the long, this is probably the best area, in my opinion. Again, not financial advice, but if you place your stop just beneath this wick right here around 76.70 or so, you could buy in right here. You could start aiming for maybe the mid-range, the EQ right here around $8,200, $8,300. Okay, it's very possible we might pop there and then start selling off. But again, I don't know. As bears, as sellers are stepping up into the market, I don't know if they would want the positions to go that high, the prices to go that high. Because that would probably mean that they would have their short positions in losses potentially, So I don't know, it just creates a very tough trading environment in something like this. If you want to go short right now, even, you know, the best bet for your short is either you go in short right here and place your stop above this wick high, or if you want it really tight, you could place your stop above this wick high. That's around 79.35 or so. Okay, and you can start aiming for, you know, lows down here or that 71.60 yearly open. Okay. CME gap. You know, here's the thing, right? There's this whole, you know, meme obviously about CME gaps, and, you know, they have to get filled and stuff. But here's the thing, folks. You know, there's still a gap pending from way up here, right? Well, actually, no, I'm sorry. I'm looking at the wrong chart or the wrong time frame. Right here, around 11.7, right? Haven't filled that. There's still a gap way down here around 3,500. We haven't filled that. Right, so the point is that, yes, I do understand that the effectiveness of the gaps that get filled is close to about 94, 95%. But again, has, you know, the CME market, especially in the time that it's been operating in Bitcoin, ever seen something like this, where it's just aggressive selling due to, you know, a black swan event that we're seeing right now? Not really. I mean, for all we know, they might just cut their losses and, you know, keep shorting the market. Right? They may not give a crap about this loss right here, this gap right here. Okay. So yeah, I mean, it's really just time to start, you know, being careful in environments like this, understanding that there are no certainties in this market. You know, just starting to be a little bit more cautious and careful. And when the price and time comes where things bottom, folks, you'll have plenty of time. I can guarantee you, you'll have plenty of time to reaccumulate, to get into your longs, to get into your spot buy positions, to get into your altcoins. But, you know, longing this market right now as is a little bit dangerous. Okay. So again, for those of you who are watching on YouTube, I hope you guys enjoy this content. You know, this is the kind of information that we provide to our Advantage members every single day. Okay. So yeah, hit subscribe, come join Cryptosomniac, go to the website right here, hit the products page, okay, and join the Advantage membership, all right, and come trade with us. If there's no more questions from the Advantage members, I'm going to close this up. Let me see if there's any last questions. If CMEs were to close their positions from the gap, what impact, if any, would it have on BTC price at current levels? You know, for the most part, I mean, like I said, the CME markets are always hedged, right? If there's someone who's sort of shorting the market or longing the market, say up here, and if he or she was trapped in this kind of position right here, more than likely they had options contracts to cover the other side of the bet, or maybe they were shorting on a different market, like say, you know, BitMEX or Coinbase, or not Coinbase, but, you know, say Binance. In some way, they're always hedged, right? No one just goes all in right here and says, hey, I'm going to long this thing, and then price drops, you know, say $1,500 over the weekend, and now they're screwed, right? If you're a good trader, you don't do that. You typically hedge your positions, okay? So they will probably be at a loss, but it doesn't mean that they're at a significant loss where, you know, half their net worth is gone or something like that. You know, it's not how it works, okay? As per EXO, we could see that so far there's really no slowing down. We saw $100 million, you know, sell candle right there 2 days ago. Yesterday's candle was about negative 535 million delta. So we'll have to see how this kind of candle, you know, closes by the end of the day. Like I said, I mean, it's very possible that maybe we bottom right here for a little bit, you know, bounce off, but the way the environment is right now, folks, it's a little scary to long. Counter trading this is, in my opinion, just unwise. If you're trying to maybe dollar cost average in, that's possible, but for the most part, you know, it might be time to not, you know, consider or consider not to go long at least, or maybe just wait it out. You know, wait it out so you don't bleed your capital. Okay. All right, I think that's it. I'm gonna wrap it up. We talked about, you know, many things aside from crypto. I hope you guys do enjoy this content. Hit the thumbs up when you see this video. And again, come join Advantage members for those of you who are not Advantage watching this on YouTube. And I'll talk to you all soon. All right. Take care. Cheers. And keep your stops tight.